I know a lot of times we're looking for shortcuts, and it's not always the best way, maybe the easiest, but not the best way. For example, I could jump down from this balcony, but that probably wouldn't have the best results. I'm always amazed by how many people look to take shortcuts when it comes to their finances. So when people go through the process of looking to buy a home, they try to look for what's the easiest way to go that route with the most minimal amount of effort. And don't get me wrong, I don't want anyone to have to go through extra steps if they don't have to, but at the same time, it's important. If you have a gym membership, you don't just get in shape. You have to go to the gym. If you go to the doctor and you lie to them about what's wrong, then you're probably not going to get the help you need. Well, in today's video, we're going to talk about why the pre-approval is so important and why that process is something that people really need to take seriously. Diving right in and talking through this. So what is a pre-approval? Let's start there with the definition of what an actual pre-approval is. So by definition, a pre-approval means that you've gone through and a licensed mortgage professional has gone through and they have reviewed your income, assets, your credit, all qualifying documentation and requirements for getting a mortgage. Now, when we go through and look at this, some people look at going through what's just the pre-qualification process. Pre-qualification is done. This is the quick and easy, right? This is where you'll go through, you'll call up your lender, you go through your bank and say, hey, I'm looking to get a mortgage. And maybe they run a quick soft pull on your credit report and tell you like, yes, great. Based off everything you're telling us, you're approved, and they send these letters out. There are actually even services out there that you can apply online with very little information, and they will send you a proof of funds letter or an approval. That you have to run. If you ever fall across some type of service where it's just giving you this letter, then you should run the other way very quickly. Now, I get it. Maybe you just want to see a property. You want to get in and look at this property, and they won't allow you without a pre-approval letter. So you resort to one of these services. But what happens if you walk in and you love the property and you need to make an offer, and offers are due in the next hour? There's competing offers, there's multiple bids. This is your dream home. You're ready to make a move, and you didn't take the steps to prepare. Well, you're not going to be able to call up that online service provider that gave you that quick letter and get a quick loan approval. And you might be in a position where that could cost you. I think we make assumptions that we're in a good position. Like, oh, you know what? I don't need to go through the process because I'm strong. My employee's strong. I've been running my business for 10 years. It's amazing. Well, the joke is that what's good for your accountant is bad for your banker. I run into clients who run their business all the time successfully, and they make a lot of money, not on paper. And then they have problems getting a loan because they didn't go through the steps to find out what are the requirements. A pre-approval is important because you're going to understand what are the requirements specifically for you, for your setup, for the loan that you want to get. Going through and looking at your documentation allows you to have a better understanding of what those options will be. So now let's move on then and talk about the pre-approval. You talk to someone like me. We go through a very thorough analysis. We're going to look at all the requirements that go into getting you a loan. I want to look at your income documentation. So just to give you a quick list of that, maybe we're looking at your tax returns, your W-2s, your pay stubs. If you're self-employed, we're going to look at your K-1s. A fun fact, a lot of times when we look at your K-1s, if you own that business and you're more than 25% owner, let's say you're a partner in the business and you own more than 25%, then be prepared. We're going to need to look at your business returns as well. What we're doing is we're not trying to make this more difficult, right? As a lender, we're not trying to make your life hard. Instead, we're trying to make it better by looking at exactly what the underwriter is going to request. On my team, we actually have this documentation put in front of my underwriting assistant so we can issue loan approvals. So we'll go through and require these income documents. On the flip side, down payment-wise, we want to look at your assets. You have to have money available for the transaction, right? This is a proof of funds. We want to make sure you have the money that you need for the down payment, the closing costs, as well as reserves. So depending on your loan program, you may have to have a certain amount of money in savings outside of the transaction. So we're going to want to look at your assets, and this can include checking and savings accounts. Don't forget about retirement accounts. These are great sources for reserves. So 401k, IRA, pension stocks, these are different ways that lenders can look to give you the support you need to qualify for certain loan programs. Going through and looking at that further, then of course, we're going to look at a credit check. One of the biggest changes in the industry that we've seen over the last year is allowing for a soft pull on your credit. Now, this is great. We're able to pull a soft pull and access your true FICO score. So this means that you're in a position where we're able to go through and tell you exactly what your real credit looks like and what your loan approval will look like. If we pull the soft pull and then we that morning and that later in that day we pull the hard inquiry, we would pull the exact same credit report. So we can issue real loan approvals with these soft pulls. But the credit is important. When the lender looks at your credit, what are they looking at? They're looking at the the accounts you have open. How long have those accounts been open? They're looking to see what your credit depth is, not just the credit score. Certain loan programs require that you have a certain amount of accounts. You may have to have, say, 3 trade lines or 3 accounts that have been open for a certain period of time. So it's important to know that when a lender looks at your credit, it's not just the credit score. Don't assume just because you have a higher credit score, you can qualify for the best loan terms. So going through with that, quick checklist, we're going to want to look at your credit, we want to look at your income docs, and we want to look at your assets. Looking at those 3 items are going to help us tell you with full confidence what type of loan you can qualify for. We can give you options. Better yet, now that we've reviewed all your documentation and we've provided this, now you can move quickly. So if you walk into that property and you need to make an offer in an hour, we'll be ready. And you can also have your loan done quickly without any stress, right? No one wants to go through and run around gathering these documents when you go under contract on a place. You're going to have a lot to deal with. You're going to have attorney review and inspection period and, paint choices. Will this rug fit in the room? Whatever it is, there's a lot that goes on and it creates stress. So another, I think, benefit to getting this done up front is it's going to alleviate that stress and you've taken care of things while you have the time. So just remember, a shortcut, although it seems good in theory, is not always the best option for you. If you like this video, despite the noise in the back, and you'd like to learn more about financing options and a better way to position yourself when you're looking at real estate, please make sure to like and subscribe. It really helps our channel out.